All right, let's dive right in. Today, we're looking at a massive comeback story in the Singaporean market. We're talking about Koh Brothers Group, and they've pulled off something pretty incredible in just 1 year.
Incredible is right. Just look at these numbers. I mean, this is what caught our eye. In fiscal year 2024, they were looking at a $5.5 million net loss. But then, boom, a year later, they're sitting on an $18.6 million net profit. That's a swing of more than $24 million. So, yeah, the big question has to be, how in the world did they do it?
Okay, so to get to the bottom of it, here's how we're going to break it down. We'll start with the turnaround, then dig into what actually drove that growth. After that, we'll check on their financial health, look at what's next, and wrap up with the big one, what this all means if you're a shareholder.
Sounds good. So, first up, let's look at that big move from red to black.
Exactly. Where did this sudden burst of growth come from? It's time to unpack the numbers. Well, it really starts at the top line with revenue, and just look at that jump. They went from about $238 million in sales all the way up to nearly $330 million. That's a 38% jump in a single year. That is a huge boost.
And it's not even a mystery where it came from. This chart tells the whole story. I mean, it's pretty much all from one place: construction and building materials. The other parts of the business, real estate, leisure, they're barely a slice of the pie. So what was going on in that construction division to make it pop like that?
Yeah, it seems to be a combination of a few key things. First, their profit margins just got better. Basically, they were making more money from every single project. Then, their main businesses, construction and real estate, were just performing better. And on top of all that, they had a nice one-time bonus from selling off some land in Malaysia. So it's a mix of doing the day-to-day business better and making a smart sale.
Right, and you don't have to take our word for it. The CEO himself, Mr. Francis Koh, basically said the same thing. He pointed to the positive momentum in Singapore's construction industry and said their experience helped them just ride that wave. Sounds like a classic case of being in the right place at the right time with the right skills.
Okay, so making a profit is obviously fantastic news, but any savvy investor knows that's only part of the picture. We've got to look at their overall financial health. Look under the hood at the balance sheet to see if the company is truly on solid ground.
And the first thing that jumps right out at you is their cash position. Wow, they are sitting on over $114 million. That's an enormous cushion. It means they can invest, they can pay down debt, or they can just weather a storm if things get tough. That's real financial strength.
And all that cash has a huge impact on another number investors love to look at: the net gearing ratio. Now, that might sound a bit like financial jargon, but think of it this way. It's just a way to measure how much debt a company has compared to its own money. The key takeaway is simple. The lower the number, the better. It means less risk.
And lower doesn't even begin to describe it. Look at this drop. It went from 0.37 all the way down to 0.09. That's not just a dip, that's a nosedive. In a good way. It shows they took that profit and immediately put it to work paying down their debts. From an investor's perspective, that makes the company way safer.
Okay, so we've established they had a fantastic year, and their finances are looking rock solid. But what happens now? Let's talk about the future. What are the opportunities, and what are the risks?
Well, the biggest opportunity is hard to miss. They have a construction order book worth $1.1 billion. And let's be clear, this isn't just wishful thinking. These are confirmed projects. The company says this gives them a clear line of sight on their revenue all the way out to 2029. That's exactly the kind of stability you want to see.
It really creates this interesting split, doesn't it? On the one side, you have all these amazing opportunities, that huge order book, a positive GDP forecast for Singapore, and strong demand from the public sector. But on the other side, you've got these global risks hanging over everything: economic uncertainty, a cautious property market. It's really a story of a strong company navigating a tricky global environment.
Which really brings us to the final piece of the puzzle, and maybe the most important one for people holding the stock. After a year like this, what did they get back? Let's talk about the dividend.
Yeah, the payout came in three parts. First, there was an interim dividend, then came the final dividend, and on top of that, they added a special dividend. So you add all those up, and it comes out to a total of 1 Singapore cent for every share you own.
And that special dividend is interesting. The CEO explained it wasn't just about the great financial results. It was also the company's 60th anniversary. So they framed it as a special thank you to the shareholders who've stuck with them over the years.
It's a pretty nice touch. So, when you put it all together, it's a really impressive story. Koh Brothers took advantage of a hot market, made a lot of money, and then used that money to make the company fundamentally stronger by paying down debt. Now they've got this incredible pipeline of future work. So the big question we're left with is this just a one-hit wonder, or is the company really building a solid foundation for long-term growth?
And just a quick reminder before we go, this content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.